In this video, I'm going to talk about 4 mistakes that traders in the 6-month to 12-month experience zone make. Stay tuned. Hey traders, a very warm welcome to you. Okay, so you might be thinking this is a very specific kind of area of experience, and actually it is, because I want to distinguish between the very new guys who are just starting out and kind of finding their feet. They're learning what a trade is, what long is, what short is, a few chart pans, getting kind of into it, making tons of mistakes, you know, just rolling with it and a bit scrappy. And there's a massive drop off from that. There's a massive amount of people who get involved in it and say, you know what, trading sucks, I am out of here. And that's fair enough, you know, it's not for everybody. But the 6 month to 12-month period, generally speaking, you're interested enough to make a little bit more of an investment in yourself for improvement. You're interested enough to dig out some information on strategy, on this, on that. You know how challenging it is by that point. You go in all green, don't you, at the beginning, thinking this is easy, man. I'm just going to order my Aston Martin now. 6-month period, you kind of know that it's a challenging game, but you're prepared to put in the work. So 6 to 12 months, I think this may be 6 to 18 months, maybe 6 to 24 months, but it's different for everybody. But I want to distinguish from the very newbie and also from the very experienced kind of trader who's at the sort of decade, year, or maybe even 5 years, and everyone sort of grows at a different rate anyway. So it's that little sweet spot there. And these are 4 mistakes that I've picked out. There are more, but I think these are possibly the ones that can be focused on the most and get the most benefit from. So in other words, there are more out there that you can focus on, but I've picked the 4 that I feel if you put the effort into, you'll see the best reward out of, like the 80-20 rule that we've talked about before. All right, guys, number 1 is trading the right market. I see a lot of traders trading, they've developed a strategy that suits them. They're at the 6-month period, so they kind of know what they're good at. They're finding their feet a little bit. You're saying, okay, I'm better at trading trend days. I'm better at trading momentum plays. I'm better at scalping. I'm better at day trading. I'm better at swing trading. I'm better at this. I'm better at that. But they're still kind of stuck in the market that they've always been trading. So in the first 6 months, a lot of people flick from this currency pair to that currency pair. Maybe they try a bit of gold, maybe they try a bit of indices, maybe they try this, try that. And then they kind of settle on one and say, well, I've got to stick on one. But then they're finding their feet with their setup, and then they're kind of using a strategy that's not really the right strategy for the market. So in other words, if you're using the momentum type of strategy and you're trading it in something that's very quiet or very mean reverting, you're going to struggle with the results. If you're trading something, you know, from the long side that's in a bear market, you ain't going to get the results you want. That kind of thing. And I'm actually being very broad with this because I don't want to get too granular with my comments on this. But I really want to say that it's important to have the right strategy with the right market. So if you're scalping, you need a market that is conducive to scalping. If you're swing trading, you need a basket of stuff that's actually moving for you, not too aggressively, but just the right amount. You know, picking that right market. So it might be time, if you're in this time period, as sort of experience zone, to say, hey, am I really trading the right market? You know, let me evaluate, let me assess my good strengths at the moment. What am I good at? What am I bad at? What am I trading? Am I trading the right kind of thing? Okay, should I be trading another market? Am I really in the right market here? I'm trading this because everyone else is trading it, or because I've always been trading it, but should I really be looking at stock? Should I really be looking at currency pairs instead? And having that evaluation and that assessment and that appraisal. So that's the first one, and that can change your performance overnight, guys. You know, if you suddenly, you know, using the right tool in the right conditions, you're going to make good money. If you're using the wrong tool in the wrong conditions, the tool might be the best tool in the world, the best strategy in the world, but if you use it in the wrong thing, it's pointless. You know, we could use an analogy with an actual tool. You've got the best hammer in the world, but if you're trying to drive a screw into, you know, a big piece of timber, good luck with that. You know? So number 2, putting things into perspective. I see this a lot, and I've been guilty of it myself. You get to that period of experience where you know you've got to be all in. You've got to go all in to make it work for you. You've got to be absolutely nailing this thing hard. It's what you want. You're going to push. But you've got to put it in perspective, guys. If you're getting really stressed out about a losing trade, if you're getting really stressed out about a bad day, the market not going your way, you're getting stopped out, just take a look at some of the stuff that's going on. out in the world and put things into perspective. You know, you've got the ability, you've got capital, you've got a good brain on your shoulders, you've got the hardware to do it, you've got the opportunity. So, you know, don't get too beating yourself up or caught up in the kind of little world of trading of this market's doing this, or I'm not performing as I should be, blah, blah, blah. Just put things into perspective, guys. If you're there, you've got your health, and I know it sounds a little bit corny, a bit cheesy, but it's true. And actually that helps you take a step back from things and say, you know what, it's not the end of the world. I've got tomorrow, I've got the next day, I've got the next week. You know, I'm here, I'm able to do this. I'm in such a privileged position to be able to even be trading compared to many, many billions of people. So just putting stuff into perspective. And that's not kind of being a fluffy approach to it. That's just literally, even if we look at it from a practical of improving your trading, that will work. Whether you want to look at it from a kind of broad overview or not. So number 3 is life balance. Again, similar, and we're on a similar kind of vein here, but honestly, this is the sort of stuff that does improve your trading. It's very easy to do, and you start to see improvements elsewhere. You know, understanding that we've talked about this before in videos, but I know that this is the time period, the 6 to 12 months experience where you're all in, you're committed, you know it's hard, but you're just focused flat out on it, and you're still kind of finding your feet as well, so you're kind of diving around a little bit. But knowing that you have got to have the balance, you've got to have time for your family, you've got to have time for your hobbies, you've got to have time to take a break, because that will not only improve your life, obviously, it will help you have a broader life and a better kind of life as a whole. But if you just want to be really clinical about it, it will improve your trading. If you just want to do it to improve your trading, it will improve your trading. I almost guarantee it. I don't guarantee anything in trading, but I know that if you do that, you'll see better results in your trading. Number 4, a trade idea flow. I see guys who don't really have what I mean by this is they don't have a process for generating their trade ideas. You know, they will just let the trade come to them. And whilst that's okay, I think you need a process or a system that presents the ideas to you. So if you're trading momentum play, you want to be alerted perhaps when something is moving quickly so that you can look at it. If you're trading a support and resistance play, you want to be alerted to something that's approaching a good support that you've kind of done. So your flow might be, okay, in the evenings, I know I trade these basket of markets on a swing trading perspective, and I like to trade these 2 strategies. Okay, so in the evening, I'll do my initial filter of ripping through charts to find something that matches my parameters. Then I'll put those into a screener that then flags up when they have another filter, whatever it may be. The point is, you've got a process for generating those trades. Even if you're day trading, that could be something like, hey, I only want to get involved at the daily lows, the prior day lows, prior day highs, the open, whatever it is. But you've got a process for when you potentially could take a trade. So reducing that cognitive load, and also, you know, it prevents you from kind of diving into the trade without even thinking about it. It also prevents you from getting involved in the stuff that you really shouldn't be getting involved in. All right, guys, I think those are pretty important, those 4. Let me know your thoughts and comments in the comments section below. If you like it, give it a thumbs up, and don't forget to subscribe if you haven't already for more videos from me and other traders on this channel. Good trading, take care. Of course, keep that risk managed, guys. I'll see you in the next one. Bye-bye.